Hello, Oracles. Oracle Tim here from Oracle Investments. Chance favors the prepared investor. What I mean by that is we are going into some times of uncertainty. We have never come through a pandemic like we have, where interest rates have been as low as they have for this long, and interest rates are about to go back up. There's a lot of uncertainty out there. Are we going to see high inflation tomorrow? Most likely. Are we going to be above or below expectations? We don't know. How is the Fed going to handle things going forward? We have no idea. Jerome Powell said that they're not looking to raise interest rates too quickly, which was very bullish for the market. He also said they're not looking to unwind their balance sheet until later this year, another very bullish sign. But some people believe that maybe this isn't going to work. So we still have a lot of uncertainty in the market. How do you handle this? It could be a very good trading market for the entire year. But for those of us who are going to be just long-term investors and don't really want to trade, how do we go about this? Be prepared. And this is going to be like many lessons that we learn in life. A lot of times if we just win the lottery, we don't know what it's like to actually be wise with our finances because we just got a lot of money very quickly. However, if you took 10 years to work diligently to work down your budget, get yourself out of debt, understand how all of your finances work, learn how to invest, you will come out significantly wiser. And while you may not have as much money at the end of that as you did from winning the lottery, you'll know how to spend it wiser, and in the long run, you will know how to make that money turn into even more money than you would if you just won the lottery. And the wisdom that you gain along the way is something you would never be able to buy with lottery winnings. It's just something that you have to go through and experience in order to get there. And the same can hold true for what you're going to be doing with investing. If you're investing long term, you sit here and it's going to take some time, but you're going to learn a lot of things along the way. And it could be a slow growth. And while sure, it would be great to have those great plays where you go in there and you have a momentum swing like a GameStop that we had last year, or an AMC, and you put a bunch of money into it, shoots up real fast and you make a lot of money right away. That's awesome. But what happens if you don't know what to do with that money and you think it's going to keep going up and then all of a sudden the bottom drops out and you lose all of your money? You didn't learn anything. You didn't get the wisdom that you needed to be able to make the right decision when that happened. As you invest long term, you begin to learn these things. And then if you happen to have a couple of great stocks that do spike up like that, you'll know how to handle it. And so as we go into the year, the best thing you can do is have wisdom and be prepared. One of the hard lessons I learned over the last year and a half were, making sure I had cash on hand. And having cash on hand allows me to take my emotions out of this. And I'm prepared for anything. So if I have 5 to 10% cash on hand, what ends up happening is when the stock market goes red, I can buy a little bit. And I'm not going to just spend all of my cash and buy everything on every little dip because we don't know if the dip is going to keep on dipping. Nobody knows where the bottom is. But by having 5 to 10% cash on hand, I can buy a little bit and buy a little bit here and there as it goes down. And then if it starts coming back up, I just sit back and get some cash back in. Or if I have some stocks that I'm like, you know what, I've gone profitable, I can sell those off, add them to my cash reserves. And if the stocks go up a little bit more, I can put some stops in that kind of protect me and give me an opportunity to maybe make some more profits. But I can also get some cash if the stock market comes down. Just gives me a lot of versatility and agility. And having the agility in the stock market is the best way to play this, because while we talked about, having alpha information for Tesla, when it comes down to it, the big money really has the alpha position. They know what all of our buy and sell orders are. They have that in their pay for order flow. They can see all these numbers. So they know when we're putting in our buy prices at $9.50. They know when we're putting in sells at $9.75. So they'll drive the price down, make all of our stops go off, sell all of our stocks out, and then they buy it in lower from us. They drive the market that way. So if we know what we're going to hold and we still hold strong, and we're like, you know what, we've got this conviction, I've got this cash on the side, I don't need to sell, then you have the comfort of sitting back and saying, you know what, I don't need to put in those stop sells for the stocks I really want because I don't need the cash. And I'm not afraid because I know they're going to go back up again. and I have the money to dollar cost average down. And I know for me, one of the reasons that I would always be afraid and have that emotion of, do I sell now because the stock is going down and I don't want to lose more, was because A, I didn't have high conviction in those stocks, and B, I didn't have enough money on the side to be able to buy into dollar cost average down. Now that I have that, oh man, I can sit back and I can still, feel the emotions, but they don't dictate which way I'm going to go with my trades, because I'm like, all right, well, yeah, it stinks that the market's down, it stinks that my stocks are down, but hey, I've got this money here, I might as well buy some more and bring my cost basis down as well. And that's just the way I have played this over the last year, and it has really made a huge difference in my trading because now I am prepared for anything that can possibly happen. So as we go into the next few months, we have interest rates most likely going up. And while, the market is seemingly preparing for this, the truth is people don't want to hear the truth. The truth is interest rates need to go back up. That's the reality of the situation. They can't stay at zero forever. So while we think that the market is pricing this in, reality is when we get to that point and the interest rates start going up, we're going to see some ugly times because the market really hasn't priced everything in, and big money is going to utilize our emotions and fluctuate the stock market even more because they know they can, because they know a lot of retail investors are going to be susceptible to it, and they're going to just take us for what we're worth, squeeze out whatever pennies they can, and use it for their own gain. And so for tomorrow, we are seeing three most likely outcomes coming out of our CPI data. We have expectations at around 7%, and we have a month-over-month expectation of 0.4. So what's going to happen is, if we come at our numbers, the market may stay flat. If we come down lower than expected, we may see a nice little rally in the market because we're saying, you know what, inflation is not as bad as we thought it was. This is a good bullish sign. We shall buy the market. If the inflation levels come in higher than expected, we can get ugly and we can be selling off quite a bit. And for how long, I don't know. So for me, I am prepared for any one of these three scenarios to play out. If we are below expectations and go bullish, I will buy a little bit more initially and then just let it ride and see how high this is going to take us. And I will just dollar cost average daily on all the stocks that I have high conviction in. If we come in flat, I'm just going to continue playing it the way I have been. And if we come in higher and the stock market goes red, I will probably dump out a couple of my low conviction stocks that I may be losers on just to free up some cash. And then I'll just buy this dip little by little as it continues to dip down because we don't know how long it's going to last. And I know many of you out there have said, you're basically all in the stock market. And that's fine. It's fine to be that way. If you are there, it's going to be harder to control your emotions. You don't have the ability to buy in on these dips. It's one of those things, just hold it and ride it out. Especially, I know many of you are, all in on Tesla stock. So just ride it out. You'll be perfectly fine. And for me, looking at my long-term plan is having different cash flow options, having so many different varieties of cash flow coming in. So just in case, the dip keeps on dipping and maybe I do run low on cash, I always have more cash coming in from the outside that I can add to my portfolio if need be. And that is all what comes down to just being a wise and prepared investor to be able to weather all of these storms and be as agile as possible to take advantage of every situation that arises. So when the stock market goes red, be excited to buy more. When the stock market is green, just be excited to let it ride up and maybe you can take some profits on some stocks. It's relatively simple said like that. I know it's not as easy to actually do, but I gotta tell you, taking 3 months to just save up my cash reserves made a monster difference in my stock market investing. And it was probably the best thing I could have done. And it did stink for those 3 months because I did no buying and there were a lot of great buying opportunities, but there's always going to be buying opportunities. So just take your time, step back, get your cash reserves built up, and I guarantee you will get into a position where you will just be able to be prepared for anything that happens in the market and your emotions will completely be taken out of it. And this strategy is one of the main reasons I was able to 4x my entire portfolio over the course of 2021. Let me know in the comments below, what do you guys use for cash reserves, for cash flow options coming in from the outside? Do you guys keep a cash balance or maybe some cash plays in your portfolio to be able to take advantage of these opportunities when we go red? Let me know in the comments. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla information, all of my trades, and any other pertinent stock market information I can with you guys there. Otherwise, I will see you guys all later. Have a great one.